Got someone that doesn't want to say their name, Al.
Anonymous.
Yeah, thank you for that. Love your
I like
show.
how in the previous segment you changed reconcile to fix. That was good too.
Yeah,
it works.
Well, I love your show. I drive a Ford F-150, drink Bud Light and Fireball, and have 2 cats.
That sounds like you, except for the cats.
For the cats. I recently retired at 53 with 2 adult college graduate offspring, and my wife is still working. Here's my situation. Questions. For current year, we're looking at around $85,000 of income between the two of us. $5,200 of dividends from real estate investments and $5,000 from dividends from our brokerage accounts. My wife contributes $900 per month to our 403b and will max out the IRA of $7,000. This gets us to about $92,000 of income and $17,800 of retirement tax write-offs, or $77,450 of taxable income. Using the standard deduction of $25,900, this leaves us $32,000 below the line for the 12% tax bracket. All right, something seems a little funny.
Well,
here.
I think
He's using some different terms.
Yeah, he is.
So okay. 92 minus 17.8 is 77,450.
It's actually 95.
Adjusted gross income. Then you take the standard deduction of 25,900 to get to 50,000. What's this 32,000 below the line?
Because the top of the 12 is roughly 83,000 for married. So 50 to 83 is about 32,000. I think that's where that comes from.
Okay, is that what he's doing?
I think so.
My wife has roughly $40,000 in a regular IRA account and close to $90,000 in a regular 403b. This will be the first year since we began investing that we qualify for a Roth IRA. I'd like to start converting her retirement accounts to Roths to avoid future taxes. We plan to live on cash this year and next. All of her income goes into retirement accounts and health insurance. Also, should I do the contributions now or wait until the end of the year to do the contribution and conversion so that the IRA contribution is tax deductible, or does it matter? Sorry if that's a dumb question. Does it make sense to convert all of her IRA this year and then her 403b early in 2023, assuming the markets don't come roaring back in the meantime? With a progressive tax rate, I'm assuming that not all of her conversion this year would be bumped up into the 22% tax bracket, but I'm not sure. We've decided that my wife's IRA, 403b, and brokerage accounts will be our legacy accounts, along with the 529 plans for the grandchildren. So we'd like them to be as tax efficient as possible. She plans on working until 60 because she enjoys her job and will continue to contribute her income to retirement accounts and health insurance. Once she retires, our health insurance will be covered and she'll receive a small pension. We plan on living on the remainder of our liquid assets, pulling from my IRA. We'll likely start the SEPP withdrawals in 2024. Cash accounts and brokerage account, which adds up to approximately $2 million. In my $16,000 inflation-adjusted pension. Our home is paid off, which will be our long-term care insurance. Again, love the show and appreciate any information provided. Sorry if I didn't include enough details.
She's got 40,000 in her regular IRA, so she can convert that. And so, yeah, that's kind of a no-brainer. Even though some of it's taxed, maybe it's a 22% bracket, that's still a low bracket. The counts are down. Now's the best time to convert. So that's kind of a no-brainer. The 403b, did it say what her age is?
He's 50. Well, they're both 53.
Oh, she's going to work longer till she's 60. So she's not 59 and a half. So that may not be available to convert. I agree with that.
I don't know. Does she work at a school district? Does she work at a hospital? Depends on the plan, right?
Yeah.
403bs are a little bit different than 401ks, and we're not going to get the nuances there. So you just want to kind of look at the plan doc. Maybe you can do an interplan conversion. If there's a Roth 403b option, she could potentially take the 403b and move it into the Roth, or just take your own money and convert it.
So he's got an IRA. Anonymous has his own IRA.
Right.
So
he's got a couple $1 million in it.
Why not? Well, I don't know. That's a combination of brokerage, cash, and IRA. But anyway, it's probably a good number. That's what you ought to convert.
Right.
I mean, go ahead and do your wife's 40,000. That makes sense. Should you do more? Probably. I mean, we don't really know what your tax bracket is now versus the future and what you need to live off of, and a lot of stuff to help us figure this out.
And then if your wife is going to continue to work, and then you're just going to jam all of her money into retirement accounts, but in the meantime, you're going to do a separate equal periodic payment with your retirement accounts, doesn't make any sense.
Makes no sense at all. You'd live off your brokerage account and do more conversions.
And let your wife, and then live off of your wife's income.
Yeah.
Let yours continue to defer or convert.
Right.
Because once you start an SEPP, what that means for people that are listening that don't understand that is that he's retiring prior to 59 and a half. And so he needs access to the retirement dollars. He doesn't want to pay the 10% penalty, which is totally understandable.
Sure.
So the IRS came up with a 72T tax election, which allows the individual under the age of 59 and a half to get access to the retirement funds without paying the 10% penalty. However, you have to take a separate equal periodic payment, which you can't turn off until 5 years until you turn 59 and a half, which sucks.
Yeah, and it'll probably be a lower amount than you want anyway.
Exactly. Or if you want to, and then you're like, okay, well, how do there's 3 ways that you can calculate it.
Yeah, it's not like you can just go in and say, okay, I need 50,000 this year.
Yeah.
That's not how it works.
Right.
These are equal periodic payments.
And so sometimes what we've seen is people split their IRAs. So this is the IRA that I'm going to take X amount of dollars and put it in this IRA and do the SEPP on that versus the whole amount. Because if he's retiring at 53 or needs the money at 53 or 54, that's 6 years that he's going to have to take the same periodic payment. And if it's on the full IRA balance and the market is down like it is now or it gets volatile, I mean, it's hard to get caught back up. So I don't really care for his strategy all that much.
Yeah.
I think he needs to kind of fine tune it just a smidge.
And one other quick thing, do the contribution now.
Yes.
Don't wait.
Yep.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.